Good morning. Today is September 25th, Monday, and the time right now in Singapore is 2 minutes to 11 in the morning. And let's do a bit of a recap in US equity markets. We can see that US equity market closes on the weak note, and this is a pattern that we have seen throughout September. Although we only have 1 week left towards the end of the month, we still see that the general direction this month is basically to trend lower. And of course, this is on the back of the Federal Reserve maintaining a higher for longer interest rate outlook. And this is the sentiment that is impacting equity markets, so to say. Now, on a technical level, we can see that the Dow Jones Cash Index, this is the cash index, by the way, top out at 35,679 and 13 this month, in August. And it has been coming down in a three-wave pattern, likely to actually target the 33,420, which is at the bottom end of this range here, which previously was where the buyers actually emerged. So we can see that this trajectory suggests that we will see possibly further losses ahead, at least in the near term, towards the 34,000 levels in the Dow Jones. So this is setting the stage. If the market can actually hold here, all is well and good. But if the market accelerates to the downside below 33,000, then something else sinister is actually happening. So be aware of that. And in the S&P 500 cash index, we can see that we are seeing a similar pattern. The S&P 500 actually top out at 4,607.07 in the late part of July. So it actually top up a much earlier than the Dow Jones itself. We can see it's also following a three-wave trajectory, targeting about 4,270 levels. So this is again very much in line with this area here, which is marked at 4,261 to 4,299, which is an area where the buyers actually emerge to take the market to the high for the year at 4,607. So this is a trajectory. Like I say, if this market holds at 4,260, is all as well and good. But if the market accelerate, especially below the 3,200 levels, 4,200 levels, then it is on the way to 4,100, which is the next level of support is going to be. Okay, so watch out for this move here, just to be on the safe side. Now, in the Nasdaq 100, we are seeing similar, but it appears that the Nasdaq seems to be a lot firmer than the rest. Market tops out at 15,932. Even earlier than the S&P 500. So in terms of the market peaking, the Nasdaq 100 actually peaks about a week before the S&P 500, which in turn peaks about a month before the Dow Jones. So we can see this trajectory suggests that we are likely to see further losses ahead, and immediate support level is likely to be about 14,245, which is just marginally below this bracket of prices, which previously saw buyers actually re-emerge. So do again watch out for this level. But if the market should continue way below 13,900, then it is gunning for the next level at 13,400. So this could be something we want to watch, because we're entering a October month, which is notorious for market crashes we have seen throughout its history itself. Okay, then in the Asia market, we can see last week we have a major burst up in the Hang Seng. We can see the Hang Seng actually rose 2.3% last Friday on the back of news that foreign capital are going back into Chinese equity market. But this morning we see that the Hang Seng is already down 2% from the high that we saw last Friday, 18,178. This is basis the Hang Seng futures contracts. And whatever that's happening today obviously is neglecting the news that caused the market to surge yesterday on last Friday. So if this is a trajectory, actually we are not seeing something new. All the highs are getting much lower than the previous high. So this suggests that a bear market is currently in full swing in the Hang Seng. And if the market do break out below 17,500, it is on the way to 16,800 levels. So do watch out for whether this market can hold out at 17,514, which was last Friday low. And in the Nikkei, let's take a look at the Nikkei. Nikkei itself, this is again futures contract in the Nikkei 225. Prices continue to edge higher, although there was a brief moment where it actually pulled back, I think, in sympathy with the Chinese equity markets. But currently, I think that the market trajectory suggests that this level here may temporarily offer some kind of resistance. That level is 32,350 to 32,440 in the futures contract. And again, this is looking like a larger three-way pullback, and I think at some point the market will actually go down to 31,000. Okay. And in the dollar front, we can see that the dollar index has been very, very firm, despite what we see. And of course, in spite of the Fed chairman saying that interest rates is highly unlikely to come off next year. In fact, they have actually revised their expectation of a 1% cut to a 0.5% cut going to 2024. So that has put a floor on the dollar itself. For the time being, market participants actually feel that there is a lot more scope for the dollar to rally. However, the market right now is within this sensitive area of 105.34 to 105.87. So unless the market breaks out above the upper end of this range, it is likely to be contained here, and the downside potential is for a move back to 104. And in the euro dollar, we can see euro dollar remains under pressure. We can see the market actually registered a new low for this series at 106.15. And downside potential for this move is possibly a market continue to drift lower to test a 105.65 to as low as 105.15 levels. Upside potential is only limited to 107.38 to 107.67. Okay, so upside potential is not much, downside also not very much. So there is hardly any trading opportunity unless you are going to scalp the market, depending on where the euro dollar hits, whether it goes up first for you to sell or whether it come back down first for you to buy on the dip. Okay, and in the sterling, we are seeing similar action. Sterling remains under pressure because last week the Bank of England decided to hold interest rate unchanged, and that caused the sterling to be sold off to as low as 122.30. And this morning we see hardly any bounce at all. And if there's anything, I think the market will dip first before it bounce. The area to watch out with 120 or 170 to 120 even. Sorry, 122 even. So if this level can actually hold, there is scope for at least a technical rebound, but topside is going to be limited to 124.16 to 124.45. Aussie dollars remains in consolidation, a very wide consolidation. You can see that the trading range for the Aussie has been kept below, within this range at about 0.63 half to at about 0.65 half levels. So we can see between these two levels here, we can see market is basically hanging on for dear life, not deciding which way you want to go. But this could be setting a stage, a very large accumulation base for the market to actually rebound at some point in time. Okay. And over in the dollar versus Canadian, while the dollar has been very firm against all other currency, it has actually declined against the Canadian dollars, largely because the Canadian inflation is actually at its record high right now at 4% in recent years. And this is causing speculators to actually think that the Bank of Canada may have no choice but a high interest rate. So this is actually underpinning the Canadian dollars. So this drop here from 137 all the way to 133.80 is the dollar weakness against the Canadian dollars. That means inversely, the Canadian dollars has actually strengthened from a low of 136.90 to as high as 133.70. So right now we see a bit of a bounce. We have completed a minor three-wave rebound, and it does look like there may be a larger degree rebound back to 135.70 to 135.90 levels. So do look out for a blast beyond 135.24, which is this high over here, towards 135.70, even to as high as 135.90. And this is in danger of seeing the market come back down again. So do watch out for the possibility. In dollar yen has been very, very stubborn. In fact, this morning we have a marginal high at 148.48. And do be aware that the talks and the fear of a Bank of Japan intervention in coordination with the US Treasury Department is actually very, very real, because last week, Janet Yellen, when she was asked whether she will understand if the Bank of Japan actually intervened to bring down the dollar versus the yen, she said it all depends on the situation, meaning to say she has more or less given her blessing. Okay, so what we fear is that if the Bank of Japan actually singly intervene, the market impact will be quite limited, but it's still going to be psychologically damaging. However, if there's a coordinated intervention between the Federal Reserve and the Bank of Japan or any other central banks in concert with the Bank of Japan, that impact it will be much, much larger. Okay, so do watch out for, as the dollar yen started to rise, especially when it started to go into 149.5 to 151.90 levels. This is going to be the danger period, because last October, when the market hit 152, that's where the market actually sell off very in a very massive way, from 152 all the way to 127. So there's a big move. So be aware of chasing this dollar yen ever higher, because the risk of intervention is very real. Okay, and over in the oil market, we can see that crude oil prices are a little bit steadier this morning. High traded in the WTI crude oil futures is at $92.43, and we are beginning to see a possible technical pullback. We can see that this is setting up a structure for a pullback to at least $87.27. And of course, the market will have to take out the low here at $88.29. But I think the downside will be quite limited. This is setting up to be a buying opportunity. So do look out for further dip below $88.37 towards the $86.31 to $87.27. Ideally, I would love to see the price goes back even a bit deeper to below $86. This will present a much better and more comfortable buying opportunity areas. Okay. And over in the precious metals, we can see that gold prices is under a little bit of a pressure because the dollar is so strong. And do understand that the dollar and commodity prices are inversely correlated most of the time. And this has caused gold prices to actually fell from $1,947.40 to $1,913 over last week. And we're beginning to see that there's a possibility we may see a small degree decline all the way to test back the 1,900 levels, ideally into 1,885 to $1,900. So that will be a much technically feasible level to actually go in to buy on the dip. Okay, over in silver, this is the spot silver prices. Silver has exhibit a slightly different structure compared to gold market. We can see the recovery from $22.30 is remaining very robust. We have a high traded on Friday at $23.78, and this suggests that we are possibly seeing a technical rebound back to the $24.10 to perhaps a high at $24.40. Once this structure ends, that will be anybody guess where it will hit next. But at least for now, the market seems to be gunning for $24 to the mid $24 levels. Over in Bitcoin, we can see that this morning there was a bit of a struggle attempt to rally, but it couldn't sustain above $26,770 before it come back down to test the 26,000 levels. So by and large, we can see that this level offers a little bit of a support, but there's really no incentive to drive the market because there's really no news whatsoever. So in the meantime, the market is just hanging on, trading in a sideways movements itself. So do watch out for any sudden move in this digital asset space. In the meantime, there's really no catalyst for that. So in this week itself, I think Monday today, market will be very quiet. We don't have major statistics that's going to be released tonight. However, in the middle of the week, everything is going to get a lot hotter. In the meantime, you take care, and I come back to you tomorrow with another update. Bye-bye.